Is the banking system bad? What's going on, everybody? My name is Greg Brown. I'm the founder of Evolution TV. And today I want to answer a question that comes up in a few different circles and conversations. Reason being, if you guys don't know, I'm actually licensed in the financial services industry. I do have a life insurance license. And so what ends up happening, whether it be life insurance versus banking, you'll hear this conversation. If you ever heard like become your own bank, and you'll hear, the bank isn't giving you interest, so cut out the middleman, be your own bank, leverage policies for tax-free advantages. And a lot of the wealthy leverage that concept. But one of the questions comes up is banking good? Is banking bad? And so in less than 10 minutes, I'm going to give you guys a perspective of banking, but it's not banking itself, it's how we look at it, right? And so before we get started, guys, this question came up because I had a conversation with a lady telling them about, the way that banks and insurance companies work and how some of these massive insurance companies will actually give you hundreds of thousands of dollars to put your retirement with them, right? So like, for example, the average American has around $200,000 to $300,000 saved up for their retirement, which is not a lot. But these companies will allow you to like put the money with them, and then they'll give you like 50% bonus, all this stuff. She's like, there's no way, right? She's like, I don't see how the heck why would they give us that money? And right there, guys, introduced into the conversation one of the things that holds so many of our communities back, and it's scarcity, guys. It's a scarcity mindset. It's this skepticism that it's like, that sounds too good to be true, right? I'll give you an example because I have a mentor who used to work at Apple, and he was a manager there. And what used to happen is every once in a while, a kid would break their laptop, right? And so the kid would come in, and they would say, okay, look, I was working on a final, and I just broke my laptop. Like, what can I do? And he'll say, hey, take it. Just get a new one. So he has the discretion to do that, right? It's called pennying it out or penny it out. And so he does it. And what can happen, sometimes that person can say, wait, right? The average American, the way we think, a lot of times it's like, no, that's too good to be true. What's the catch? You ever heard the statement, what's the catch? What's the catch? They can't just be giving me this free laptop. Nothing's for free, right? What you realize is that, yes, that company just gave away a free laptop. They lost profits on that laptop. But what they got back is a loyal customer. They have somebody who's probably going to be with Apple long term. They're going to share that story as well. They may go recruit 10, 15, 20 other customers as well. And so does it truly hurt Apple to penny it out? No. And so why do I say that? Did that benefit Apple? Long term, yeah. Short term, did that benefit that kid? It also did. And so guess what, guys? Real business that lasts a long time is always beneficial for all parties. Right? Sometimes that scarcity mindset, right? That skeptical, fear-based mindset is like, no. People can't win by helping people out. People are only winning by screwing somebody else over. No, that's not how businesses work. Real businesses have to solve a problem for somebody. It's like if you ever heard someone who says, no, I'm not going to pay somebody to come clean my house, or I'm not going to pay anybody to cut my grass when I could do that for free. Oh, we're missing the point, man. Like, how valuable is your time with your kids? How valuable is an extra 3 hours of your life where you can come up with an idea, your next multi-million-dollar idea? But yet you rather spend, 3 hours cutting the grass because you don't want to pay somebody to do it. If you have the income to do it, now if you don't have the income, I get it. But if you have it but you just think that, oh no, because they're going to benefit. No. They made $300, but you just got 3 hours or $30 or $50 or $20, whatever. You just bought back 3 hours of your life. That's the most valuable thing you have. And so I say to say that when you're looking at the way that the average American moves and thinks versus the wealthy, the perspective on the world is the plus or minus, not necessarily like the banking system isn't necessarily bad per se. Now, it can be bad when we use it a certain way, right? Like, so the average American, typically what you guys see here, you got a guy, he's climbing a corporate ladder and he's like falling off the corporate ladder, but he's using the bank as a security blanket or as a safety net. He looks at the bank as his financial stability. He also looks at his job as a financial stability. Why is that a problem? Because if the bank is his safety net, but Inflation's at 7%. That means his safety net is falling apart. His safety net's losing value every day, right? And then if his job is his safety net, guess what else happens? If he gets laid off, if he worked for Twitter and they had their 10,000 layoffs, or Facebook or Amazon, then he has no safety net. This is null and void. There's not a, you ever heard the concept of job security? So many people think their job is secure until they don't have it anymore, right? And so in this position, banking is bad. A bank is bad for you because you're dependent on it. You're dependent on your job. Whereas, if you look at the way the wealthy and the affluent move, they're a bit different. You know, they may have like life insurance. So you'll see here the foundation here is like life insurance, trust funds, real estate, private equity. Now, 84% of millionaires, they kind of started from scratch. They may have had some up here and there, but they say 84% of millionaires are what we call self-made, right? And so they may not have this strong of the foundation, but one of the things that sets the tone for everyone who's built wealth is this thing called vision. Okay? If you look at individual, you look at the Williams sisters, Venus and Serena Williams, right? Their parents weren't wealthy. They were not trust fund kids, but their dad had a vision. He saw something in them that nobody else saw. He saw something in them that they didn't even see. And so he poured life into those kids. He watered the seed, and they cast the vision for where they could be, okay? Even if you know the story of Jeff Bezos. Now, Jeff Bezos did get some money passed down to him. Okay, well, he borrowed the money from his mom's 401k. The thing is this, though. Do you think that Jeff Bezos would have got her to sign off on that if he didn't have a vision for where he was going? Right? They say where there is no vision, the people will perish. Why is that? Because a lot of times the average American complains and says, well, this person got money passed down. The challenge is, if the money was passed down to you, would you invest it into something? Or would you hold it onto your bank, afraid and fearful of where the money would go? And then instead of it going somewhere to build wealth for you, you send it to somebody else. You send the money to Uncle Sam, or you send the money to Jeff Bezos or to Papa John's. I don't know. Like, look, one thing I believe is this: you're going to build wealth. If you live in America and you're working and you're able-bodied, you're going to build wealth. The question is this: who are you going to build wealth for? Is it for you? Is it for Uncle Sam? Is it for somebody else? It's going to be built for somebody, but you have to ask yourself the question, am I going to take the money that I make and be afraid and scarce and try to hold on to it, right? Like the monkey who puts his hand in the coconut, but then won't let it go, so then can never eat and gets captured, right? Instead, the monkey has to let go to be able to eat, right? And so it's the same thing with the wealthy. The wealthy have a vision for where they're going. And now, instead of the bank being their safety net, the bank becomes a stepping stone, right? The bank becomes a stepping stone, right? The job that they have is not their safety net. They're using that job to leverage that money to eventually invest into a business. And then from there, those businesses grow. Maybe now they start investing in stocks and other things. Maybe they're investing in other businesses, private equity, and so forth, right? And so this is more so about a mindset, because this mindset promotes fear. This mindset promotes faith, right? Vision. Okay? And so it's not a matter of is banking bad. It's a matter of which side of the scale do we lean, right? It's like we had a conversation earlier about this clothing companies that they have clothing for people that are overweight, right? And so I've heard some people say, well, shoot, why don't they take all that, they want to help people that are overweight instead of giving them clothes. Like, why don't you invest your time into helping them work out so they can lose the weight? Well, yeah, that's ideal. But I think these companies have recognized some people are not going to want to do that. Some people don't want to go work out. And, there are some that are healthy people that don't want to they don't want to seek the discomfort of actually getting in shape. And so they say, well, knowing that, we're going to create something that can at least help them, because they're not going to make the decision to go the other route. Why do I say that? Because for banks, guys, the bank knows that some people are not going to want to break through this barrier of fear. And they're going to stay on this side forever. So they say, you know what? We're okay with being the safety net for those people. So the question is, do we blame the bank for that, or do we blame the person, right? The bank on the other side of the spectrum becomes a leverage point for them. And so I don't think it's necessarily the bank itself. I don't think it's the system that's trying to hold you back. I don't think that it's the government that doesn't want you to win. I think it's your reliance on it. It's your reliance on the government. It's your reliance on the banking system, right? And so my big thing that I've learned over the last few years, especially leaving the country and coming back, is how do I put myself in a position where I'm no longer dependent on this government entity or dependent on this job. Now, I'll leverage it, but I'm leveraging it with a vision of where I'm going, right? And so with that being said, guys, I hope this video brought some value to you. If it did, please like, share, subscribe, send it to somebody, man. Like, I'll tell you this, if this video brought you any value, you could be the key to help unlock something for somebody else, because the only difference between wealthy and the average American is perspective. And so if this video helped change your perspective, you may be the catalyst or vessel to help change the perspective of somebody else. Okay. And so love you guys. Thank you for watching. Again, Evo TV has a lot of content that we're going to be putting out there. And so, yeah, I'll look forward to seeing you guys on the next episode of Evolution TV. And until then, you guys take care. All right. Bye-bye.